Welcome to this program on income available for child support. I will be discussing the applicable code sections and case law, and
I will be adding comments of a practical nature. There are 6 parts to this program that are shown at left. I will wait a few seconds for you to review these topics.
income available for support is a term of art in family law. It is a creature of statute. In order to properly understand how to calculate an income available for support and use it to determine the proper amount of child support to be paid by each parent, it is necessary to start with the statute, Family Code Section 4055. The statute describes the calculation in a formula, which is so complicated that it can only be done by a computer. Fortunately, there are several child support computer programs certified by the Judicial Council that are on the market to provide the necessary calculation. There is also a free program offered by the state of California online. For most of the variations that are in this program, it is the better practice to have an expert witness show how the amounts of bonus are arrived at. That expert witness is usually a family law forensic accountant. It is counsel's responsibility to explain the law that applies to a particular instance to the family law forensic accountant so that the family law forensic accountant's evidence can show that the client's position is the correct position on any of these variations.
I agree with Kathryn that the attorney must explain her or his evidentiary goal to the forensic accountant. If that does not happen timely, the forensic needs to speak up and ask questions. In one of my cases, I had sparse income documents. Counsel requested an income available declaration with no explanation. Rather than proceed according to my own plan, I asked questions. By asking questions, the forensic can obtain an explanation of the evidence that counsel is seeking and work to meet the goal. So the bottom line is to train your forensics to ask if counsel for their goals. Don't just proceed in the customary way. So if counsel's case needs a waltz rather than the usual foxtrot, counsel needs to communicate and supervise throughout the process.
I want to make one last point before moving on to the next topic of this program. The support formula does not make any reference to the custodial or non-custodial parent. The formula is only concerned with the high earner and the low earner. After the amount of child support has been determined, if the software program shows a negative amount of child support, that means that the lower earner pays the higher earner. In this next segment, we will review the various issues that help determine the proper amounts to be input to the computer program for the income available for each parent. The easiest set of circumstances that make calculation of income available for support is the one in which both parents have regular, steady paychecks over a 12-month period and have no bonus income or other outside sources of income. All the necessary information needed to be input into the computer program is on the pay stubs of each parent. All the necessary information may not be on the W-2s for each parent, such as deductions for health insurance or, for some government employees, a mandatory retirement contribution, so it is recommended that the necessary numbers be taken from the pay stubs. From the inputted data, the computer program calculates the income available for each parent and the resulting child support amount and which parent pays the child support to the other parent. The amount of income available for child support can also be used for a temporary spousal support order. The computer programs have a subprogram for that function. The computer program for temporary spousal support is not to be used for permanent spousal support.
Let us look at the basic inputs in 2 screens. In this basic screen, the preparer enters number of children, filing status and monthly income amounts. Be careful not to mix annual and monthly amounts. I suggest that you stick with monthly amounts. If you are new to support software, I suggest that you download the software manuals, enroll in instruction programs from the publishers, and search youtube.com for instructional videos. On screen now are the basic deduction lines of input. Again, enter these amounts as monthly amounts. Consult the program manuals or the helplines in case of questions. The computer-generated proposed guideline support is shown at right. I find that the various certified support programs are highly accurate if the input is correct. The problem is getting the input correct. Kathryn, back to you.
Let us proceed to focus on other factors that affect the amount of income available for support that may not be reflected on pay stubs. We will consider what factors determine how distributions from a small business or professional practice will be used to calculate income available for support. We will begin with bonus income. One of the most common variations on income available for support is the receipt by one or both parents of bonuses. A bonus has become a catch-all term to mean any irregular payment which is not guaranteed by the employer. It has expanded from its initial concept of an annual payment based on performance of either the payer's spouse or the company in general, is set forth in Remarriage of Minkin. The term bonus means what the parties expected it to mean at the time of determination of the issue, either by negotiation or court order. In Minkin, order said bonus, and at the time the order was made, the only bonus that payer spouse received was an annual payment based on performance. Subsequently, payer spouse changed jobs. The new compensation package he received included a senior management incentive plan, bonus, and IRC 457F long-term incentive plan, and IRC Section 457B deferred compensation plan, and a change of ownership agreement, which gave payer spouse a calculated amount in the event of a change in the ownership of the company. The trial court ruled that the term bonus meant what it said at the time the order or judgment was entered.
Let us look at the numbers. Robert argued for a 40% support payment on just the performance-based cash bonus. That support number totaled $200,000. Patricia wanted 40% of all compensation above the salary amount. Her claim was $700,000. That was $500,000 more than Robert agreed to.
The calculation of bonus income arose in the case of Henry Osler and Smith. Yes, most people reverse the names, but this is the proper citation. Although this case was decided prior to the enactment of the Family Code and the legislative plan for calculating bonus income, the underlying principle on which the trial court based its decision to add a percentage of income to the base child support is fundamental to California's public policy for support of children. That principle is that children are entitled to share in both parents' standard of living. Computer programs now have a sub-program that creates a bonus table. If both parents get bonuses, it is important to run two separate bonus tables, one for each parent. If there is also a spousal support order, temporary or permanent, the bonus calculation may apply to spousal support also.
Let us take a look at the practical side. I am going to show you screens from ex-spouse. The DISA program is very similar. Step 1 is the input of income and deductions that is the same as when there is no bonus being paid. I assumed a salary of $10,000 per month. The amount of support due each month is shown at right. For step 3, we enter the maximum bonus. I have entered $24,000. The result is shown on the corresponding line as $1,375 child support at a rate of 5.7% and $5,236 spousal support at a rate of 21.8%.
Osler and Smith was an annual bonus calculation, but the same chart can be used on, for example, a monthly calculation where a parent is a salesperson with a small base salary and commissions paid each month or quarter. The most difficult calculation of income available for support is one in which one or both of the spouses own and operate a privately owned business or has a professional practice. By operate we mean that spouse controls how the revenues of the business are allocated, and particularly, how revenues are moved from the business operating funds to the spouse. For purposes of income available for support, the character of the business or the practice, whether community property or separate property during the pendency of a dissolution or legal separation proceeding, as well as post-judgment, is irrelevant. For purposes of our discussions, we will assume as a hypothetical, that only one spouse operates a small business. In this context, the definition of terms is very important. We are specifically avoiding the term income, because it is too confusing to use it in our discussion when our objective is to define income in terms of its availability for support.
Let us define 3 important terms. The first is revenue, which is the gross amount received by the business from sales of goods and or services. In a lemonade stand business that sells lemonade at 5 cents per cup, the 5 cents is the revenue. The Internal Revenue Code allows trade or business deductions that are ordinary and necessary. However, not all expenses permitted to be deducted for income tax purposes are permissible under the Family Code. In a lemonade stand business, The cost of lemons and sugar would be ordinary and necessary business deductions. However, a gift for a girlfriend would not be deductible. C. Owner compensation is an area of much confusion because it is difficult to identify exactly what an amount received by the operating spouse is. Is it a salary? Is it a dividend? Is it a distribution? Is it a loan? All of these are ways in which an operating spouse can take funds out of the business, and each of them has specific characteristics, especially under the Internal Revenue Code. Assuming Bobby owns the stand, his revenues less business expenses will be his owner compensation. There may be complications for free cups given to friends, buying extra lemons to reduce profits and support, holding back profits to open a second stand, etc.
Family Code Section 4058A2 defines the amount of income from a business available for support, gross receipts from the business reduced by expenditures required for the operation of the business. The Family Code definition differs from the IRC.
Taxable income is gross income or revenues minus deductions that are allowed by the Internal Revenue Code.
The biggest difference between tax law and family law, in terms of dollar effect, is depreciation. Depreciation is a term from the IRC that essentially permits a business to reduce current revenues by an annual amount that, theoretically, when accumulated, will be used to replace the item being depreciated. In some cases, the depreciation can reduce the IRC taxable revenues to zero or even a negative number. The first case to discuss the application of this tax rule to family law is Asfa v. Woldberham. It held that depreciation of real property should not be deducted from the gross revenues of a business for purposes of determining income available for child support. In Remarriage of Rodriguez, 2018, further refined the rule to include a rejection of depreciation for automobiles. Most recently, in Remarriage of Hine, the same principle was applied to farm equipment. Hine clarified the underlying family law principle of maximizing support for children by explaining that depreciation does not actually involve an expenditure of cash. Under the family law definition, if it is not an expenditure, it is not deductible for purposes of child support. In each of these cases, the issue of the presumption of correctness of tax returns was raised. In each of these cases, the tax returns were prepared under the control of the business owner/parent. The appellate court reversed the trial courts that assigned the burden of proof that the tax returns were inaccurate to the non-business owner/parent and stated that because the tax returns were prepared under the control of the business owner/parent, that parent had greater access to all the data necessary to properly calculate the business revenues and expenditures. It is also inherent in that kind of situation that the business owner/parent has a greater incentive to fudge some of the numbers. If there is any doubt that the tax return documents that are either not accurate or not the same ones that were filed with the Internal Revenue Service, a request for a copy of the return directly from the IRS will allay any concerns.
Kathryn, let us discuss perks. I know perks are often small amounts compared to depreciation, but I observe that forensic accountants are all over perks like a dog on a bone.
Perks receive attention because the recipient's spouse is focused on them. The caution here is that some perks create fee expense and little payback for the client. Or Jim, as you would likely say, the forensic is just chasing his or her tail. The term perk comes under the broad concept of compensation. It is relevant to family law, because it may be part of a calculation of income available for support. A perk is a benefit to a parent or a spouse, which reduces that party's out-of-pocket living expenses. This concept seems to be a contradiction in family law theory in which the consideration of expenses is irrelevant. Perks are a benefit of employment. Perks are part of compensation but are in addition to salaries and benefits, such as medical and pension plans. Perks have little or no cash value or tax implications. Perks may include personal use of company car, country club membership, retreats at posh resorts, and/or mobile phones for the employee's immediate family. The first place to look for authorization to use perks in an income available support determination is the enabling statute. That statute is Family Code Section 4058A and subparagraph 3. The annual gross income includes, but is not limited to, the following: 3. In the discretion of the court, employee benefits or self-employment benefits, taking into consideration the benefit of the employee, any corresponding reduction in living expenses, and other relevant facts. In Stewart v. Gomez, examples of perks were fair rental value of home or partial reduction in rent, meals provided or reimbursed as benefit of employment. In the following year, the Schultz decision held that perks are entered as non-taxable or taxable income depending upon whether the perks should have been taxed and not whether taxed. In 2001, the Low case confirmed that a perk must be based on an employment relationship.
Here is the final note on the perks topic. Forensic accountants need guidance from counsel in computing perks, whether cost-effective and whether taxable or non-taxable. Leaving your forensic to his own devices can lead to an expensive analysis that is overreaching and likely to be greatly discounted by the bench officer. My suggestion is that perks require a laser focus rather than throwing it against the wall and seeing if it sticks.
Let's transition to a new topic. Where a parent is the operating spouse of small business or a professional practice, another issue may present itself. That is the issue of the appropriate time frame for determining income available for support. Family Code Section 4060 provides that an annual salary or wages is to be divided by 12 to determine a monthly amount for input into the child support computer program. However, the distributions from a small business or a professional practice are generally not determined until the close of the fiscal year, usually a calendar year. After subtracting business expenses allowed by statute and case law, the resulting amount shows the amount available to the payer's spouse for the 12-month period. However, if the small business or professional practice is growing or diminishing, that fact will affect the amounts input into the computer program. In most cases of small business or a professional practice, a long period of time, typically a 2 to 3 year period, gives a more realistic picture of the ability of the small business or professional practice to provide income to the payer's spouse. The determination of the real adjusted income based on family law statute and case law must be arrived at by a family law forensic accountant. The basis for that determination comes from an analysis of the tax returns of both the payer's spouse and the business itself. In a proceeding to establish income available for support, the parties are required to provide their respective tax returns for the prior 2 years and for the operating spouse to provide their Schedule C, if the small business or professional practice does not file its own tax returns. An item that is seldom noted in tax returns are tax loss carryovers, commonly referred to as NOLs. They can materially affect the amount of income shown on a tax return and may be subject to add-back to provide an accurate income available for support. It may be necessary to extrapolate from previous tax returns what the current revenues are because the tax returns were filed at minimum several months after the beginning of the current tax year. For that situation, a current profit and loss statement is the beginning of the determination. It is inaccurate for a calculation to be made solely on the gross income and expenses of the current year and then use that information, which is less than a 12-month period, and create a fraction to assume that the partial year is what can be expected for the full year.
Kathryn, you have touched on one of my pet peeves. Please permit me to explain why. It is my observation that a good many forensic accountants are not following Riddle because they annualize using a ratio. As the on-screen example shows, some divide year-to-date net income by the number of related months, in this case 10 months, so their theory is if income averaged $50 per month for 10 months, for 12 months the income is arguably $6,000 or $500 per month. Case law does not permit this approach. And yet I see it a lot. Here is the Riddle approach. If you have current year January to October net income, do not annualize. Instead, use the November to December actual net income from the prior year. This is the approach under Riddle. Since this concept may be confusing, let us look at the issue in terms of our lemonade stand. Our lemonade stand business is robust in the summer and not so good after September. Lemons are paid for on 60-day terms. So the lemons that are sold in August and September are paid for in October and November. The stand keeps its books on the cash receipts and disbursements method of accounting. The forensic accountant looks at the books and finds that January to September profits average $90 per month. Too often the forensic accountant uses $90 per month. This is contrary to Riddle. To follow Riddle, the forensic accountant should average Jan to September this year plus October to December of last year. This results in $50 per month.
I understand Jim's concern about annualizations and the related distortions if done improperly. There is an equal concern about the cash flow versus income issue. As Justice Sill so succinctly stated in Riddle, While we recognize that family law lawyers and forensic accountants use the phrase cash flow as a sloppy synonym for income as it appears in the support statute, it isn't. It is an unfortunate reality that the use of the sloppy term is still a common occurrence in family law proceedings. Here is our next topic. A specific concern for the tax years 2020 and 2021 are and will be the effects of the COVID-19 severe limitations or complete shutdown of many small businesses and professional practices. Special attention must be paid to any requests for modification of child and/or spousal support in existing support orders and in establishing new support orders to accommodate the mandate of the support statutes that support order are based on actual income at the time they are made. Our final special topic is phantom income. Phantom income is a peculiar type of income that is little understood by family law forensic accountants, much less family law lawyers.
Phantom income relates to income that is taxable but not received in cash. Partnerships and limited liability companies frequently cause phantom income and sometimes significant amounts. Let's look at a hypothetical. Grandpa set up a limited liability company and retained 52% so that he has voting control. He allocated 24% to husband who his son and the pair. Grandpa also allocated 24% to his daughter who is the pair's sister. Grandpa has been reinvesting profits to grow the company for the long term. He recognizes that tax liabilities accrue to the owners of the LLC, so he distributes 55% of income allocated to payer and his sister to pay the income taxes. Payer's annual income is shown at left. Taxable income is $100 for payer. Payer receives $55 that all goes to pay income taxes on the LLC's income allocated to the payer. The $45 remains in the LLC to implement Grandpa's growth strategy. In this hypothetical, is the income for support $100 or $45?
This is an issue that may be framed by the forensic accountant but is for the family law attorney to argue before the court. The payee spouse will argue marriage of Kirk and marriage of Riddle where there was clearly an intent to minimize income. The payer will likely argue that the payer has no control over the amount of the distribution. The payer must simply go along with Grandpa's reinvestment plan. And, besides, the payer's children are well situated financially, excluding the phantom income. We can only emphasize again that the calculation of income available for support is a collaboration between the family law lawyer and the family law forensic accountant so that the figure for input into the computer program is accurate and that the court understands how that figure was arrived at.
Yes, it is important for the forensic accountant to present issues to counsel, identify documents relied upon by Bates number range, state assumptions, work to prove up the facts needed for counsel to argue their case, and never simply rely on what your client told you.